Hi, I'm Rafia Hassan, Chief Investment Officer at Wifley Financial, and today I wanted to share with you some highlights on market performance in the third quarter of 2021. After a strong start to the year, global stocks experienced some volatility in the third quarter and finished the quarter marginally lower. Although the economic recovery persisted, there were still some lingering concerns regarding the spread of the Delta variant, inflation, and the Federal Reserve setting the stage for potentially less accommodative monetary policy, which all weighed on investor sentiment. Global stocks finished the quarter flat to modestly negative. U.S. stocks overall were down 0.1%. International stock returns were negative in U.S. dollar terms due partially to a strengthening U.S. dollar relative to international currencies. The weakest segment by far across global stocks were emerging markets, which were down 8.1%, dragged down by returns in China. Chinese stocks have struggled recently as their government has increased regulatory scrutiny of certain sectors, including technology and real estate. This situation was further exacerbated by news of an imminent debt default by Evergrande, a large Chinese real estate company, towards the end of September. It's important to note, though, from a year-to-date standpoint, U.S. and international developed markets are in strongly positive territory. On the bond market side, bond market returns were also pretty flat for the third quarter, as the U.S. Treasury yield curve remained relatively unchanged from the end of the second quarter. Investment-grade U.S. bonds eked out a positive 0.1% return, while emerging market bonds were down 0.7%. On this next chart, we get more granular in terms of specific segments within the stock and bond markets. A few things that I'd like to point out are U.S. large cap growth stocks were top performers during the quarter, up 1.2%. U.S. small cap value stocks, though, are still the top performing asset class on a year-to-date basis with a return of 22.9%. On the bond market side, high-yield bonds posted the best performance in the third quarter, up 0.9%, and they are the best performer on a year-to-date basis up as well, up 3.8%. Municipal bonds were flat for the quarter, but are the only other bond segment with positive returns year-to-date, aside from high-yield bonds. Overall, it was a lackluster quarter in terms of stock and bond market returns. However, it is crucial to maintain perspective in the face of such short-term performance, and remember that despite this recent performance, global stocks have delivered robust results on a year-to-date basis. We anticipate that in the coming weeks, you're going to hear a lot in the news about fiscal stimulus negotiations, the U.S. debt ceiling, and potential Fed tapering, among other topics, and the consequences of each of these events on financial market results. As always, we want to remind you that making changes to your portfolio in response to current events is a dangerous strategy. Our advice instead is to build a long-term, well-diversified portfolio based on your goals. Those are our highlights for the third quarter. As always, if you have any questions, feel free to reach out to us at wifleyfinancial.com.